Real estate or stocks? It's probably one of the first big decisions you're gonna face as an investor. And trust me, getting this one right, it can change everything. So, what's it gonna be? Which one is the better path to building real wealth? That's the big question, right? Well, today we're gonna break it all down. We're gonna look at the hard data, the secret weapons each one has, and then map out a super clear path forward for you. Let's dive in. And listen, this isn't just some abstract theoretical debate. Getting this decision right could literally mean retiring years, maybe even a decade early. But getting it wrong? That can cost you so much time and money. The stakes are really high here, so let's make sure we get it right.
All right, so let's meet our two contenders. In one corner, you've got real estate. We're talking physical property, brick and mortar. And in the other corner, you've got stocks, a piece of a global business. Okay, let's start with the real basics here. When you buy real estate, you're buying something you can touch, you can feel, something tangible. It's a physical asset you can literally stand inside. Your money comes from two places: the property's value going up over time, that's appreciation, and of course, those rent checks hitting your bank account. Now, stocks, totally different ballgame. You're not buying a physical thing, you're buying a tiny slice of ownership in a company, a piece of its future profits. So the key difference to really get your head around is this: real estate is something you physically control. Stocks, on the other hand, they give you this incredible flexibility and almost instant access.
Okay, but talk is cheap, right? Let's get down to brass tacks. Which one has actually made more money over the long haul? It's time to stop speculating and just look at the cold, hard data. So when you actually look at the numbers, what's kind of shocking? The race is incredibly close. The S&P 500, which is, a great benchmark for the stock market, it's averaged about a 10% return per year. Commercial real estate, right on its heels at 9.5%. And then you've got these things called REITs. Basically, they're companies that own a bunch of properties, and you can buy shares in them just like a stock. And they actually come in at almost 12%. So what's the big takeaway here? Over the long run, it's basically a photo finish. So what does that really tell us? What's the main lesson from all this data? It's that this isn't about some get-rich-quick scheme. Nope, it's that both of these are absolutely powerful engines for building wealth, but they both run on the same exact fuel: patience. You have to be in it for the long term.
Okay, so their long-term returns are super similar, but the way they get you those returns, well, that's where things get really different. Each one has its own unique kind of secret weapon.
For real estate, that secret weapon is a little something called leverage, and it is a game changer. Put simply, it's the power to use other people's money. We're talking about the bank's money through a mortgage to control a much, much larger asset. And that lets you just juice up your potential profits.
Let me show you exactly how this works. It's pretty amazing. Let's say you've got $25,000 ready to invest. Now, if you go put that in the stock market, you get $25,000 worth of stocks. Simple enough. But with real estate, that very same 25 grand can be your down payment on a property worth $125,000. Just like that, you are now controlling an asset that is 5 times bigger than the cash you actually put in. Think about that for a second.
And this is where the magic happens. Let's say that $125,000 property goes up in value by just 5%. That's a gain of $6,250. But remember, you only put in $25,000 of your own cash. So your actual return on your money isn't 5%. It's a massive 25%. That is the incredible power of leverage. But, of course, with great power comes, well, you know the saying. And the downsides here are very, very real. You've got high costs when you buy and sell. You might have to deal with tenants calling you at 2 a.m. about a leaky faucet. There are always repairs, there are always taxes. And you can't just sell it overnight. It can take months. So real estate's superpower is leverage, but it definitely comes with headaches and complexity. Stocks, on the other hand, have a totally different superpower, and that is pure, simple, uncomplicated speed. The secret weapon for stocks is one word: liquidity. And it's a really simple concept. It just means you can turn your investment back into cash almost instantly. I mean, think about it. Selling a house can take months and mountains of paperwork. Selling a stock, you can do that in seconds with a tap on your phone. And this accessibility is a total game changer, especially for new investors. You can get started with $100, maybe even less. And it's so easy to diversify, to spread your risk by owning tiny little pieces of hundreds of different companies. This whole low-cost, easy-access approach means you can consistently put money to work and let that beautiful power of compound growth do its thing over time.
Okay, so we've looked at the history, we've unpacked the secret weapons for both. So what's the final verdict? What's the answer? Which one is actually better?
Well, here's the thing that the smartest investors have known for a long time. You don't have to choose. The best strategy isn't about picking one winner over the other. It's about using the strengths of both to build a portfolio that's way more powerful and resilient.
Okay, so how do you actually do that? What does that look like in practice? Here's a really simple 3-step path you can follow. First, step 1, build your base with stocks. Start with simple, low-cost indexed funds. These are awesome because they let you own a tiny piece of the entire market all at once. That gives you growth and that super important liquidity we talked about. All right, step 2, sprinkle in some REITs. This is the absolute easiest way to add real estate income to your portfolio without any of the landlord headaches. And finally, step 3, target a physical property. When you've built up enough capital and you're ready for it, then you go out and buy a physical property to really harness that amazing power of leverage.
You know, it really all boils down to that classic piece of wisdom, right? By combining the speed and simplicity of stocks with the raw power and tangible nature of real estate, you're not just picking one, you're building a much stronger, more diversified financial future for yourself. So I'll leave you with this final question, and it's really for you to think about. Take a hard look at your own investment strategy. Is your portfolio really built to capture the best of both of these incredibly powerful worlds?